Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important macroeconomic and Bitcoin related news of the week. And we will start off today's video by diving deeper into the future of our money when it comes to central bank digital currencies. And there are some things when it comes to central bank digital currencies that need to be told. And that's what we're going to do today because it might get really scary. We will also dive deeper into Jerome Powell talking about inflation being transitory, and now several central bankers from several different central banks are not really agreeing with Jerome Powell, and they say that inflation might not be transitory. And when they finally get inflation to a lower point again, how will they do that, and what will the whole financial system look like when it comes to the stock market, the housing market, when it comes to jobs, etc., etc. So we're going to dive deeper in that macroeconomic aspect of what's going on right now, and it's going to get really interesting. And we will also take a look about the latest news when it comes to Bitcoin, when it comes to cryptocurrencies, and in the end of this video, we will take a look at the chart of Bitcoin because that's an interesting one and we're kind of stuck in the middle and we're waiting for a new huge breakout. But that is what we're going to discuss in the end of this video. For now, I'm going to put myself in the right corner of this video, and I wanted to tell you that only 20% of those of you who are watching this video right now are subscribed to the channel. So if you aren't subscribed yet, make sure to do so. You can do that by pressing on the red button down below, and it's completely free. So make sure to do so you won't miss out on anything you need to know when it comes to macroeconomics or Bitcoin. And we will start this week's video off with this quote of Elise Kalin. And she is saying in Bitcoin magazine that Bitcoin has been banned many times in many geographies, and yet today adoption is outpacing the internet adoption. And when it comes to this quote, I've had two things in mind. One that I've had in mind is the adoption of the internet, and the other one is the process of banning Bitcoin. And last week we've discussed the war on Bitcoin, and some people were saying like, why has the war on Bitcoin started and what's going on? So I've explained last week's video that we're now seeing that some countries are embracing Bitcoin and some are banning Bitcoin, and those who are embracing it are being oppressed, and those banning it are doing the good things in the eyes of the government. But what Elise Kalin is saying is that even though they're trying to ban Bitcoin, still the adoption is growing faster than we've seen the internet grow in 1995 until 2001. So I found this one. First they ignore, then they laugh, then they fight, and in the end you will know the answer because they will win. You will win. And this is an interesting article about the telephone industry. And what it says is that the telephone industry moves to ban internet phone software. So what the telephone business didn't want was us to be online on our telephones so that we could still use SMS and still use our calling minutes or something like that, so that we couldn't access the internet. At least that's what they wanted. The telephone and the computer industries are headed for regulatory brawl over a new technology that lets two computers talk to one another over the internet without having to pay for a long distance call. So this was the war on something that had value. And this is what I've discussed last week. Those who ban Bitcoin, but also those who are embracing Bitcoin, they see the real value of Bitcoin because wars are only starting because of something valuable. So this is what's going on right now, and we see there could be 10 million people out there with this capability within a year or two. And this was how fast the internet was growing. At the moment, 20,000 to 50,000 people worldwide are using this new technology, which is called the internet. So this is really great to read and to see what has evolved. We can't even imagine what our lives be looking like when there was no internet. So keep this in mind when it comes to the future. And when it comes to the future, one thing is absolutely sure, or we're absolutely sure of, is that there will be a new form of money, that there will be a new currency, and they call it the central bank digital currency. And this whole idea started when Bitcoin launched for the first time. So Bitcoin launched and the regulators were interested in it, but they just ignored it. And then we had Facebook. And Facebook came with Libra, later called Diem. And then the regulators were like, oh, so 2 billion people can now access a new form of payment. We have to stop this. And then we had China starting their own central bank digital currency. And now everyone is in the run for their own central bank digital currency. And we have been speculating about how or what this central bank digital currency would look like. What are the aspects? What are the rules? What are the regulations? And this guy is telling us some things that are kind of scary and crazy at the same time.
All our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge...
Okay, so they just want to have a central bank digital currency that has the same values as our cash. So what's the difference between having cash and having money in the bank, or having digital cash and having money in the bank? When you have money in the bank, for example, at Goldman Sachs or every other bank, then you have the third party risk involved. When Bitcoin was launched or announced for the first time, it was around the time that Lehman Brothers fell, one of the biggest banks in America. And this third party risk is what they got out of this pyramid. Let's just call it a pyramid. It is a pyramid. So they just moved away the commercial banks, and now they have their own wallet at the central bank. So it's now a form of cash because it has no risks when it comes to your digital money in the bank. But still, there is a risk of inflation. There is a risk of, let's say, you cannot use your money how you want to use it. So let's listen to what he's going to say next.
Difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that...
And that's what we like about cash. They just can't trace you. You have your own privacy. You can buy whatever you want. And now he's saying we can't see this. So
central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
And this is where it becomes crazy and scary at the same time, because the central bank will have absolute control on the rules and regulations that will determine the use of central bank digital currencies. So if the central bank decides that you can't buy Bitcoin anymore, you can't. So if they control your money, they can control you. If they decide you can't fly to Mexico, for example, then you can't. If they decide you can't go to the supermarket, then you can't. So this can get really scary. This can also be for for a good reason, of course. They can also use this for being healthy, more healthy, or other things that can have good reasons. But still, privacy is such a base value when it comes to everything. When it comes to being human, you need privacy, and when you're doing transactions, it's completely the same. So this can get quite scary in my honest opinion, but we are just going to wait and see what will happen next. But then I found this interesting article on the Bitcoinist, and it says Chinese banks luring customers to the digital yuan. And they say luring customers. So this means that they are like giving them treats or giving them free central bank digital currency to open a wallet at the People's Bank of China, the PBOC. And this is what we've expected for over like a year ago. Because if you are like being conscious, and if you are like thinking about the central bank controlling your money and telling you what to do or what not to do, you have to treat people right in order for them to open a wallet. So what are they going to do? We've discussed this earlier. What are they going to do? They are going to give you $200 for free every month to open a bank account at the central bank. And then they will give you the right to bring more money in. The negative interest rates will get higher on the commercial banks. And then you are starting to like balance, okay, I have risk at the commercial bank, I can just choose the central bank, and then the central bank can make their own regulations and rules. And then there's no way out of the system anymore, like we've discussed way earlier. So what they're now doing in China is they are Chinese state-owned banks are instructing employees to promote the benefits of the digital yuan to customers in the same way that banks try to sell loans, savings accounts, investment vehicles to customers. The Commercial Bank of China, the Industrial and Commercial Bank of China, along with 5 other major institutions in the country, is tasked to convincing hundreds of branch customers to use the central bank digital currency wallet. And they're just giving away treats, they're just giving away some things to promote the central bank digital currency at the People's Bank of China. And that's probably what they're going to do in America and in Europe as well. But this is going to take a while. This is going to take several years, maybe even 5 or 10 years, for the financial system to be completely restructured, or the monetary system to get restructured as well, because we all have to this is not going on in one night. This is not happening in one night. So we have to take into account, and we have to keep in mind that there are some risks involved when it comes to our future. And then we have this tweet, and this is one that really shocked me, and I think that this shocked a lot of people. I saw Mark van der Scheijs tweeting about Charlie Munger, and Charlie Munger is interviewed together with Warren Buffett, and they're speaking about Jack Ma from Alibaba. And you know that Alipay is very big in China. The same for WeChat, but Alipay is really big. And Jack Ma is now gone. Let's say he's kind of gone. And in the eyes of Mark van der Scheijs, he is a successful entrepreneur simply because he dares to innovate and therefore to risk the traditional financial system. So he's trying to innovate and being new to the party, and this is not what the normal guys in the room want, what the elderly guys in the room want. And they explain it really clear.
Is doing all the things that we should be doing right now, and I can't help but think of what they've done to Jack Ma.
That amuses me,
Well, what about what they've done to Jack Ma? He's kind of disappeared.
Well, yes, but Jack Ma's one of the swingers, so they just they said, "The hell with you." He basically gave a speech when he said to a one-party state, "Well, you guys are a bunch of jerks, don't know what you're doing, and I know what I'm doing, and I'm going to do it better." And he
Okay, and now listen.
wade into banking and no rules and just do whatever he pleased.
He also brought banking to a lot of
the Chinese
unbanked people.
communists did the right thing. They just called it.
He banked a lot of unbanked people, is what she's saying right now, and now he comes.
And say you aren't going to do it, Sonny. And I wish we had I don't want all of the Chinese system, but I certainly would like to have the financial part of it in my own country.
So they want to have the financial part of the Chinese system. And the Chinese system is a communist system, and it consists of a so-called social credit system. And a social credit system is where it becomes really scary, because this has all to do with your social credit score. And if you are a good citizen, you can use the, for example, the bus or the train. But if you are not a good citizen in the eyes of the government, you can't use those facilities anymore. Same for eating some kind of food or eating meat, or this makes me think about the fact that last week there was an article on one of the biggest news outlets in the Netherlands, which was discussing the future that we might have a CO2 budget. And this is kind of getting scary, because this kind of looks like a communistic system in which you can decide whatever you want to do whenever you want to do, like we did for this whole crisis started. So keep in mind what they're saying, but look for what they're doing. So keep in mind what they're saying, but also take a look at what's going to happen, what's really happening. So don't listen what they say, watch what they do. First listen what they say, then watch if they do what they do. And they're doing what they say they want to do. So this could get like kind of scary. We're going to take a look at the ING report from ING Poland. And these guys are talking about the traditional system. And Warren Buffett and Charlie Munger made a lot of money due to or thanks to the pyramid system. And of course, they don't want to have a different system. In my honest opinion, a state and money should be like completely not connected. Because we've had Jerome Powell talk about inflation rates. And he said these inflation rates are transitory, so we can't like turn them around again. And now we've had Poland talking about the inflation rate, and they said the following, which is quite interesting. We expect rates to remain on hold at Tuesday's central bank meeting. So probably they're not going to do something with the interest rates. They're not going to do something with quantitative easing. So it's probably going to still be the same. With the economy reopening, we see upside revisions in inflation and the GDP forecasts. So they're expecting inflation to rise even faster, and they look for a rate hike in the fourth quarter of 2021. And when the rates start to hike, then that's where there's going to be a lot of trouble, because we now know that we have a crazy amount of debt, and the deficit is getting way higher. It's at 3 trillion right now. So the difference between how easy it is to pay off your debt has a deficit of 3 trillion, and that deficit still remains to rise higher. And we see that there are bubbles going around everywhere. We have a bubble on the stock market, we have a bubble on the housing market, we have a bubble on so many different spots when it comes to the effects of inflation, that we need to have a rate hike. The rates should increase again. And this is almost impossible because we have this deficit, because countries or companies or maybe even citizens will default on their debts. But if we don't rise the rates, and we have the example from 1970s to the 1980s, if we don't let the rates go higher again, then the inflation will probably keep rising and rising and rising and rising, and we will have the same with the stagflation part, as we have seen in earlier in 1970s with the stagflation, when there was economic growth that slowed down, when there was a lot of people that weren't having jobs, and it wasn't a good time, especially not when the rates increased, because economically it was the worst. And I'm not sure how long they're going to blow up this system or blow the bubble up until it pops. I'm not sure when it's going to pop, but it's gonna be a hell of a pop, we're sure. The ECB agrees on new inflation goal of 2% and will allow to overshoot it. Same as we've seen Jerome Powell mentioning a couple of months ago. So the European Central Bank policymakers have agreed to raise their inflation goals to 2%. And to be honest, they've had an inflation goal of 2%, or at least close to 2%, which was completely vague, but the consensus emerged at the 2% at a special meeting held on Wednesday and Tuesday to conclude the ECB's first strategy review in almost 20 years. So this was the first strategy meeting in almost 20 years, which is insane. So this means that there is something really fishy here. There is something like, I don't know, it's kind of getting strange. Inflation has emerged as one of the top concerns for central bank reserve managers. The crisis, of course, and the soaring debt levels. So debt that's growing and growing, and we need more debt for the economy to grow more, but there's more and more debt needed for the same amount of growth. When it comes to being a drug addict, you have to get more drugs, and in this case we have, for the same effect, and in this case we have the monetary drug, which is creating more money, or at least buying more government bonds. So that's what's going on right now, and I'm sure these central bankers are not sure what to do. Probably not sure what to do. And right now, this is kind of interesting one, because right now we're taking a look at the interest rates on your German commercial bank account versus the inflation. So right now, inflation is higher than the interest rates, of course, because the interest rates are super low, maybe even, no, they're still super low, 0.1 or something like that in Germany. And we're seeing what inflation is doing right now. And inflation is rising so fast. And the question is, when will it stop? Is this really transitory, or isn't this going to stop? So we already spoke about this 3 trillion deficit, which is insane. And this is this financial system where everyone is talking about, which is in the eyes of Charlie Munger, which is a great system, because this is the system where they got rich in. And then we have all the bubbles, the Dow Jones Industrial Average. What could go wrong, right? Take a look. What happened from, let's say, the 1990s or 2000, when we had the internet bubble, and then we had 2008, which was this part, 2008 until 2009, I think. I'm not even sure. The housing prices had a low around 2013, and then it started to grow so fast. For example, housing prices have risen 20% since January this year in the Netherlands, which is completely nuts. And if we take a look at the inflows into the global equity funds, they are the largest on record. So this means that there is so much money available that everywhere around the world there are bubbles evolving. So there is something going wrong, right? You can't, if you are completely disagreeing with me, please let me know. Please let me know down below what you think of all these news articles and of the central bank policy, and if there still can, to be honest, I hope that this inflation really is transitory, because if it isn't, then we're going to have a dramatic economic event, a dramatic monetary policy tightening with huge I'm not even sure how to explain this, but that's going to get nuts. So I wanted to show you this chart because 14.6 million people are still claiming unemployment benefits while job openings are searching. So this is going to get this is really strange because there are people that are willing to work, but they cannot find work or they don't want to work. And this is where it becomes interesting because we have spoken about McDonald's giving away free iPhones with getting a job over there. And we've had a lot of restaurants that couldn't find employees because employees said, I'm not earning enough money to pay my rent or to pay my mortgage. So now we have this systematical problem. And when you have a systematical problem, it's coming from the wages, for example. So the wages have to rise. And because the wages will rise, there will be more money available in the economy. And if there is more money available, then the prices will rise as well. And then the wages have to rise again. So then you will have this systematical problem. And this kind of looks like there might be a systematical problem incoming. Remember the last 30 years of declining growth in wages and salaries. A trend reversal is upon us, is what Tavi Costa is saying. This would mark a structural shift in creating long-lasting inflationary implications. And that's why I am really not feeling great about what's going on right now. And I just need to tell you what's going on. So now we're going to the news, and the news is about Bitcoin and Bitcoin miners. And we've had the Bitcoin Mining Council giving a presentation, and this presentation was not needed. We know that the Bitcoin Mining Council was not needed at all, but I think that Michael Saylor wanted to have Elon Musk under his thumb, or at least he wanted to have some influence on Elon Musk, because when Elon Musk started buying Bitcoin, I think with Tesla, I think that the government asked Elon to stop buying Bitcoin or to sell Bitcoin, because Elon, or at least Tesla, is earning a lot of money when it comes to subsidies. And they're getting subsidies because Tesla isn't making enough money. So they're getting subsidies because Tesla is a green company. And they're trying to make the world cleaner, but Bitcoin isn't clean at all. So what might be the reason for this mining council is to let the government know that Bitcoin is greener than what the government might expect, so that Tesla can still hold their Bitcoin in their wallet. The Bitcoin Mining Council gave a presentation on Bitcoin and on energy, and it claims that the energy mix behind Bitcoin mining is 56% sustainable. In this article, they say that the conclusion is quite dubious. In September, a study from Cambridge Center of Alternative Financing found out that 39% of the energy behind crypto mining, so not Bitcoin as a whole, but crypto mining as a whole, was coming from renewable sources. And renewable sources is a bit different from sustainable sources, but still, it's probably around 50% or so. So that's even more than we'd expected in the first place, or when the government was speaking about Bitcoin being so bad for the environment. And then the real question is, did Tesla sell or not? Every half a year, every 6 months, there will be released an annual report. And in the end of January, we had the first annual report. Usually, it takes like 4 to 6 months for them to create a report about the last half year and about their figures, about what stocks or bonds they bought, or how they're performing, how much cars they're selling, for example. And so we expect at the end of July, at the beginning of August, we expect Tesla to point out if they have sold their Bitcoin or not. But if they haven't sold their Bitcoin, then they are looking at a loss of 100 million. and that's on a complete bet of 1.5 billion, so it's still fine, but they might have a loss of 100 million. And having a loss as a company isn't the worst thing, because when it comes to tax, it can be very great to have a loss. But we will see, and we will take a look at what's going to happen next when it comes to Tesla. And I also wanted to take a look at this tweet, because this is a tweet Plan B retweeted, and I wanted to I wanted to show you that there is more going on than we see on the top of the iceberg. Just obtained the okay to report a large European private office has completed the first phase of a stage purchase of over the past 5 weeks at an average cost of sub 32k. This is 0.85% of assets based on their published assets under management. It's 153 million and 4,700 BTC. So why is this important? Because it's only 150 million. This is important because there is a difference between European private office and the public ones. Because as a public office, you have to make a report, and they have to release that every quarter and tell in the report what they did, what they bought, what they sold, etc., etc. But there are more companies that are not public, for example, the private offices and the sovereign funds, that won't announce their purchases. So this is kind of interesting. So there's more going on, even though we don't see it. We only see the top of the iceberg. Then we've had this survey, and this is also quite interesting because there's been a survey under 100 investors in total, 50 wealth managers and 50 institutional investors, and 40% of the institutional crypto investors intend to buy a lot more, and more than 80% of the institutional investors have already invested in a digital asset, expected to increase their exposure. So 80% wants to increase and 40% wants to buy a lot more until 2023. So these are kind of interesting figures. So they bought and they have a long-term vision. I saw this week a tweet from Michael Saylor, and Michael Saylor said, if you don't have a vision of at least 4 years, then you should not buy Bitcoin, because everyone that bought Bitcoin and hold it for 4 years made money. So you must have a vision for 4 years or longer. And these kind of funds, if they're public, private, if they're institutional or not institutional, wealth managers, for example, these people have a long-term vision. So they're holding for the long term. And the crashes we are seeing have a lot to do with a lot of different things, but I will show it to you because Michael Saylor said something interesting about it.
The volatility itself is because it's not controlled. It's a global market. Anybody can trade it 24/7. You can read something on Twitter at 10:32 p.m. on Saturday night and panic, and then you can sell it, and then someone else will pile on to that. And there are reasons it's volatile. One reason is because it trades with 10x leverage. No one trades with more than 2x leverage on the U.S. stock exchange. With equity, you can't. So it trades with more leverage. It trades everywhere in the world. The other reason it's more volatile, Peter, is because it's property, not a security. And that means it's not subject to the 30-day wash rule. The IRS says if you were to dump Apple stock right now at a 20% loss, you have to wait 30 days to buy it back. And so you would think, well, I like it long term, so I think I'll take my lumps and I'm just going to hold it. I'm not going to trade it. You can't dump it on Saturday night while you're drunk. You can't dump it on 10x leverage, and you can't dump it on Saturday night with 10x leverage and buy it back on Sunday morning. You see? But, okay, so Bitcoin and crypto in general, it's the Wild West. It's true price discovery. It's true freedom.
So he's saying it's the Wild West. It's true freedom and it's true price discovery. And he's completely right when it comes to price discovery, and there's so much going on about volatility, so it has nothing to do with institutionals or investors or whatever. It has a lot to do with this price discovery, and a lot of people that are getting more affected by getting scared at Saturday night and buying it back on Sunday with the leverage or something like that. So he is completely right. So then we come to this news article, and this is about a crypto company launching 2% Bitcoin reward credit card. And this is quite an interesting one because the credit cards are kind of taking over. And what I've discussed last week is about the fact that doing transactions when it comes to Bitcoin, when it comes to stablecoins, when it comes to the digital version of the euro, it's super easy. And a lot of people were saying, no, it's not easy and it's super expensive and I can pay at several stores and blah, blah, blah. And I told you last week that when I was in Mexico and when I was in America, in Miami, in New York, in Playa del Carmen, in Tulum, we could just pay with our own Visa card. And this is mine. I wanted to show it to you. This is my Binance card, and it's a debit one. And the nice thing about this one is that you can select which currency you would like to use to pay. So you put an amount on your card and then you can just select, for example, I want to pay first my total amount of Bitcoin. Then I want to pay with my BNB coin. Then I want to pay with digital form of euros or maybe even dollars, because you can also use dollars. You can choose a tether, for example. So you can just choose which coin you want to buy, and you can do that by your phone, something like that. You can just change it really easily. And the greatest thing is that you can get a cashback. And I've just checked how much it was, because last week I couldn't tell it to you. And you can get a cashback of 0.1 until 8%. And this is when you hold BNB in your wallet. So for example, if you hold 10 BNB in your wallet, you will get a 3% cashback. I've been trying to buy a car with this credit card, but unfortunately it was impossible because you have a maximum spend amount of, I think it was 8K or so. But still, if you spend 8K, you will get a 4%, 3% cashback with only having 10 BNB on your account, and it can sit on your trading account. So there's no need to put it on your card. It can just sit on your trading account. And this is what I really like, because when we are in Holland, usually we just pay with normal debit cards. No one wants to have a credit card, also not when renting a car or when going to a hotel or something like that. But if you go to Mexico or if you go to America or to Canada, you need an American Express card or something like that. But I'm not a fan of American Express because you will only get discounts or points or whatever. And when it comes to this card, you will just get a cashback, which is, in my opinion, it's great. So, okay, enough said about this card. We're now going to the stock to flow model. I wanted to show you about where we're... So I wanted to show you the stock to flow model and where we are right now when it comes to this rally and when it comes to our stock to flow price range. We're currently sitting around this area, and when it comes to the stock to flow, we should be sitting around 100K or so. And we are not. We're still right below this level. We're currently around 32 when we've had the last price of the day, and the price decreased as well. And the question is now, does this look like what we've seen in 2013 after the fact that the rally started again? Are we going to see that the rally will start again, and what will happen next? Or was this the top? When it comes to the stock to flow model, the model hasn't been broken yet. So the model is still okay. But when it comes to technical analysis, there are some things going on. So we're now taking a look at the chart of Bitcoin, and we're looking at Bitstamp, the exchange that has the highest volume, so it's easier to draw your analysis on. We're taking a look at Heiken Ashi candles instead of the usual Japanese candlesticks because they tend to create patterns way prettier. And when looking at this chart, we're seeing several things. We are seeing that we've had a top over here. We had this head and shoulder pattern. I would like to show you how accurate doing technical analysis is. For example, we've had this rising wedge over here, and this rising wedge broke out downward and it hit the target point almost completely. Like, take a look at this. Is insane. So now we're going to take a look at this head and shoulder pattern, and we always take the bodies of the candles instead of the wicks, and then we're going to do this. So we also hit this target point. We went lower, but it was for such a short time. So we've hit the target point, and now we're currently, here we had this rising wedge, and now we're currently in this falling wedge. It looks like a falling wedge right now, and I will show it to you on a 4-hour chart. So we went down after this right shoulder, head and shoulder pattern. Then we had some downward trend. It wasn't really downward, it was less downward, but still we were in a downward trend. We broke out upward, but the volume was super low. We wanted to have volume as high as we've had over here, something like that, for a couple of at least hours. So 4 plus 4 plus 4 plus 4 or something like that, 4 hours maybe even. But we didn't see that at all. So we went back into this channel, and now it looks like we kind of have some sort of falling wedge. And I just wanted to show you what a falling wedge looks like. Usually it falls down, it comes from above and it falls down into this triangle pattern with lower bottoms and lower highs, and then we break out. Usually we tend to test the resistance and then we break out again, and this quite looks like a falling wedge. It quite looks like a falling wedge, but we don't want to fall out downward. So usually in 67% of the formation of these patterns, it is a pattern that will turn around the trend. So we should be breaking out upward in 67% of the breakouts of a falling wedge. This means that we could go as low as 30,000 or something like that, because we want to have lower lows but also lower highs. And usually when we're seeing patterns like this evolve, the volume goes down as well, and that's what we see on this chart. The volume is super low. And to be honest, this is great because we are now waiting for a breakout on this on this pattern, on this really interesting pattern, and it could go the other way around as well. So let's do calculation of where the price could hit when we break out upward. For example, if we break out here, then we will go back to 41. If we break out on this side, then we're kind of having a problem because we are going to see 20k or so again. So that will be the worst. But let's hope for an upward breakout. But it's going to get really interesting around this area. If we can get some coins around this area, it would be great in my honest opinion. But we could still break out downward, so we have to wait. This could be a great opportunity to short, but keep in mind that we will have wicks probably way below this level. And if we break out upward, we wanted to see high volume for at least a couple of hours. We want to see high volume on the daily as well. We want to have high volume when it comes to the daily candle and break out of it. So we want to close above this area, for example, above 33 or so. So this is what's really important to keep in mind right now. We are currently in this falling wedge. It's a great way to accumulate more Bitcoin, but it's also quite a scary one because we're probably going to see new lows as well. So this was the video for this week. I hope you've enjoyed this video, and make sure to Subscribe to the channel down below and press the red button and the bell so you get notified when there's a new video online. And also make sure to follow me, it's this way, on Instagram, so you will be updated earlier. And make sure to do that on Twitter as well, so you get the latest news when it comes to Bitcoin and macroeconomic stuff. For now, I would like to thank you for watching, and I hope to see you again next week. Bye bye!